Yo, what's up, everybody? It is Tuesday, April 8th. All right, now I'm sure everybody's waiting for me to talk about the bonds, so I'm going to talk about the bonds. Then I'll get to the market after that. Just the facts. Just the fact. There used to be a TV show in the 60s, shows you how old I am, called Dragnet. And on that show, it was like a detective drama. Police drama. They had a guy, Joe Friday, one of the detectives, and he always used to say, just the facts, ma'am, just the facts. So I'm going to give you just the facts right now. Because, sometimes we get lost in these daily swings when things are crazy like this. And you really need to step back. And just when stuff like this is happening, man, like, you can lose your way so fast. It's like walking through a deep forest, and if you don't have a compass, everything starts to look the same after a while. Like, you don't know where's north, where's south. I mean, you need your instruments, like I always say, but perspective is a really helpful tool. It's a really helpful thing. And when it gets like this, when it's crazy like this, like yesterday, I think they said yesterday was the biggest drop in treasuries in like 2 years or something like that, maybe more, I don't know. And they were down again today. But that's why you got to step back, because you get so caught up in these day-to-day fluctuations. You don't know which way's up, which way's down anymore. Like, what's policy, what's the fundamentals? Like, you don't know. It's very easy to get confused. So last year I said the Fed was going to start cutting rates, and they started to cut rates. And they cut 3 times and brought the Fed funds rate down a full percentage point. They did a 50 basis point, then a 25, then a 25. Then they stopped. So they dropped the policy rate from 5.5 to 4.5, which is where it has been. And right now the 10 years at 4.29, let's call it 4.30. Okay, that just happened in the last couple of days. At the beginning of this year, and I said, as we go into 2025, I said they're going to cut rates. That was one of the things I was mentioning in the perspective of we're going to see an economic slowdown, because I kept saying we're going to see lower interest income transfers. Now, and I'll admit that hasn't been the case. It's been true for Treasury bill interest. That's down 20 billion compared to last year, but overall interest income transfers are up about 29 billion because of Treasury securities, bonds and notes that are rolling over with higher coupons and stuff like that when they mature. But that's, if they keep cutting rates, that'll come down too. Back in January, now, I had a long position in the Treasury market. That was one of my big strategic recommendations. All right, late last year. I said, you want to be in this trade. Rates are going to come down. They're going to cut more. And I was also talking about other things. I said there were going to be a slowdown in fiscal. I said, be careful with the new administration, because, there are a lot of unknowns, and there were many, many people saying this was going to be a boom year. Anyway, I don't want to get off course. So the Fed stopped cutting rates, all right, for now. We're only in April. In January, you had the 10-year went up to like 4.85. Now, I was long, so that was a terrible position, but I stuck with it, all right, because my outlook didn't change. Inflation was coming down too. Now, the Fed was stubborn, and I kept saying, like, if you keep rates high, you're not really going to bring inflation down very quickly, because, again, the cost of credit is reflected in the cost of all goods and services. So we were at 485, 480, something like that in January. back down over here. It came back down again in this 425 to 4.5. It's been bumping around in there the first couple of months of the year. Then we dropped down recently in March. We dropped down to 414. And I was saying that we're going to trend down to 4.0. In March, 10 days ago, we dropped down to 414, and then we quickly shot up to 440, which I said that could happen because the policy rate is still 425 to 4.5. So I mean, if they're not doing anything, rates could still gravitate back, to that range, 4.25 to 4.5. So we went down to 414. We came up to 440. I said you want to buy more anywhere above 4.25. I said give or take 10 basis points. So they went to 440. That was 15 basis points higher. Then we went down. I said we're going to go to 4. We went to 4. I said we're going to go to 375. We went to 384 last week. At which time I said it was probably a little bit, overdone on the downside, the yield, and we can get a pop back up because the policy rate is still there at 4.25 to 4.5. So we pop back up and now we're at 429. I mean, I don't see what the big deal is. I really don't see what the big deal is. Last year we were at 5.5. We're at 429. Now the Fed is on hold, but right now the markets are predicting 3, maybe even 4 rate cuts this year. Okay, that's maybe getting a little bit too optimistic, but looks pretty good for a rate cut in June. Even looks possible for a rate cut in May, at least the way Fed fund futures are priced right now. June, July, September, and December is a little bit in play too. So like all of you are saying, oh, what happened to your bond trade? Ha 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 ha. What happened to it? I'll ask you, what happened to it? Nothing happened to it. It's totally normal what's happening. We went with a policy rate of 4.25 to 4.5. Last week we were all the way down to 384, which obviously is too far away from the policy rate, with the Fed telling us they're going to stay there for now. Okay, it's like the rubber band got stretched too far and then it snapped back. So now we're at 429. 10 days ago we were at 440. What's there to discuss here? I don't understand what there is to discuss. Now, I know a lot of you get your kicks because I said last week my bond trade is doing well. You hate that. You hate when I say, or when anyone says something is doing well. You want to attack that. You want to knock it down. You want to tear it down. You want to make it look like, the guy is an incompetent fool. Well, that, you're that kind of person. What can I say? You are that kind of person where you have to attack. You're miserable. So you want to see other people be miserable too. I'm not miserable. I'm not. I don't know how else, like the show, Sergeant Friday. Give me the facts, man. Just the fact. I gave you the facts. We went from 5.5 last year. We got all the way down to 384, last week when I said it could even go to 375. I said 4, yeah, it went even below there. Now we're back up to 429. 10 days ago we were at 440. Don't you see the direction? Did we go 5.5, 6, 6.5, 7? Is the Fed saying they're going to raise rates? I tell you what, come back to me when they raise rates and then say, Mike, you were so freaking wrong. You don't know your ass from your elbow. Come back to me then when they raise rates. But right now, when it looks like they're going to cut rates and the thing is going in my direction, yeah, it popped back up. Look, if you trade or if you invest, Look, I learned this a long time ago. And, even though I learned it, I didn't really adhere to it. This is why it's really hard to make big money as an investor. You know why? Because we tend to just panic and get out. We could have a good trade on. I'll tell you something, in the beginning of my career and well into my career, and I've said this many times in the past, I was a really good analyst. A hell of a good analyst, right? I'd see things like way before, and I'd get into the trade early, and then it would start to go in my direction. And as soon as there was the slightest little blip against me, I would get out with a nice, comfortable, small profit. And then I would watch that thing go sailing away in the direction that I thought it was going to go, where I would have made 10 times, 20 times, who knows how many times my money. So many times I did that. And even worse, when I got out and I saw it sailing away, I would jump back in, and very emotionally, without any planning, then it would, it would dip down again, and I would get out and take a loss, then it would go back up, I would get back in, chop myself up to the point where all of that preparation and all that analysis, I ended up losing a ton of money because of lack of self-control. What makes it hard to make the big money is exactly that. Like, it's really hard to stick with something. Like, you need, like I always tell you guys, you need your instruments. You need to back out of it sometimes and look at it at a 30,000 foot perspective. Otherwise, when you're like this, like micro focused into the damn thing, I mean, you see a little tiny thing like that when there's a whole big picture that you got to sometimes just, get yourself out of it, get yourself out of the frame and go back over the big picture, get some perspective about what's going on. Hey, are the things that I said are the things that I expected to happen, are they happening? If the answer is yes, then there's no reason to change your position. Now, maybe it ends up being wrong, but you can't second guess yourself, because what's the point? If you start getting into that kind of behavior, second guessing yourself all the time, you operate from a position of weakness. You operate from a position of lack of confidence. Nobody can do well, operating like that. Nobody could do well operating like that. Now, that doesn't mean confidence guarantees you're going to make it every time. No. But if you're diligent and you do your work and you understand, if you have an understanding, like I do, like we do, who subscribes to the MMT, understanding of how monetary systems function, and you're patient, then that's all you need. Now, maybe it won't work out. Maybe something pops up that changes the puzzle. Could be these tariffs. Like today, what happened today? First of all, it was up. The market was up crazy in the beginning. I had a sneaky feeling like it was going to come down. It did come down. I'm starting to see maybe, I've been mentioning that, I was saying, like, you go to the doctor's office, they see something in the blood test or they see something in the scan. The doctor says, not so much to worry about. Let's monitor that. Well, right now, Dr. Mike is saying that thing that I saw in the scan, it's starting to get a little bit more interesting to me. Okay, maybe we do have to worry about it. All right. So like today, he boosted up the tariffs to 104% on the, this is Trump. I said, expect a lot of volatility with this guy. My trade was the slowdown in fiscal flows for 2025. Maybe you say, well, Mike, how is that a trade? How do you play that? I intended, or I am playing it with the Treasury position. And like, it's working. It's just, taking its time. But that's where patience comes in. I mean, it's taking its time because you have a central bank, the Fed, which is not cutting interest rates right now. All right, so it's not all of you who think it's the market that sets rates and the bond vigilantes and all this nonsense. You could see how this thing works. When it gets too far ahead of itself in one direction, like the rubber band, boom, it snaps back because the Fed anchors the rate. Now, I'm telling you right now, if the Fed said, you had Powell last Friday. I spoke about this. He came out after that job report, even though the market was crashing down 2,000 points. After the job report, he's like, well, I'm worried about inflation. And boom, we had right away, we came off the lows in the yield in bonds. So he's still talking about inflation, Powell. And you had another Fed member today, I forget who it was, who said something like, we can't be too quick with this rate stuff. In other words, hinting, alluding to the fact that, we still got to be cautious on the inflation thing. Meanwhile, you got gold going down, you got oil going down, you got gasoline going down, you got copper going down, you got natural gas going down. I mean, come on, man. It's the same thing in reverse when he said it's transitory, and you had everything going up at the time back in 2022, 2021. So, which by the way, I did not think, even though back then I saw what was going on, I said back then, if they raise rates, that's not going to stop the inflation problem, and that's going to add a lot of money into the economy as a result of interest income transfers. That's exactly what happened. So that's the story. That's the facts. All right? Now you could say, your trade blew up because, yesterday it was at 384, today it's at 429. I don't look at it like that. I don't look at what happens in one day and then I say the idea is no good. I don't know why anybody would do that other than if you are like a really short-term trader and you're trying to, day trade the markets. That's different. That's not what I'm doing here. That's not what I'm doing here. So like, that makes, to me, no impression on me whatsoever to say like, now, if they start raising rates, then I was wrong, big time wrong. If inflation starts skyrocketing, but really it comes down to if they're raising rates. But that's what's going to determine where the bonds are going to go. And even though they're saying, we got to be a little bit cautious, they're not saying they're going to raise rates. And as I've said many, many times, the Powell Fed, that is the current Fed, run by Jerome Powell, it just follows whatever the market says. It's not really an independent Fed. And right now, you have priced in 3 rate cuts, maybe even 4 rate cuts. So like, I'm very comfortable with it, with the bond trade. Very comfortable with it. Now, if you get your kicks, if you get your rocks off of saying, Mike Norman was wrong and you said that, then, have at it. Have fun with it. I mean, seriously, have fun with it. If that's what gets your rocks off. I mean, it's kind of sad, but like, that's your life, man. Not mine. I got better things to do. And, with age comes wisdom, folks. That's right. A lot of other things suck with age, but with age comes wisdom. I've been through a lot, you know, so it all gets stored up in the memory banks, and I could draw from that. So yeah, anyway, that's it for today. Please like and subscribe, and don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.